Hello and welcome to the Maryland Insurance Administration's first webinar of the Financial Education Series. My name is Kiana Walton, and today's event is Establishing a Sound Financial Future. You will hear from the Cash Campaign of Maryland, the Office of the Commissioner of Financial Regulation, and the Maryland Insurance Administration. We hope from today's webinar you will walk away with a better understanding of how to build and maintain good credit, knowing your rights when dealing with student loan services, check cashing businesses, and payday lenders, as well as understanding the basics of auto insurance. Before we start, I'm going to go through some housekeeping rules of today's event. Today's event is being recorded. Please make sure that you stay muted during the presentation. During the event, when you have questions, please utilize the chat box. After the program, we will open it up for your questions, starting with those that have already been submitted. Once the Q&A begins, please continue to stay muted and continue to use the chat box to ask questions. Today, our first speaker will be Sue Rogan with the Cash Campaign of Maryland.
Thanks, Kelly. Good afternoon, everyone. And thank you so much for joining us today and taking time out of your day to be here. Again, I am Sue Rogan. I'm the Director of Strategic Partnerships with the Cash Campaign. As you can see, CASH stands for Creating Assets, Savings, and Hope. And if you don't know us, we're a nonprofit organization that provides different programs and services to help people build their financial well-being. So just quickly, some of the programs that we have available, we have a financial coaching program and a financial planning program. And anyone can take advantage of this. It is a free service that we are receiving grant funding to provide. Financial coaching is where you get to work with someone one-on-one for an unlimited time period to be able to work on your financial goals. And the financial planning program offers you the opportunity to work with a certified financial planner to create a customized plan for you. We also have free tax preparation for families who earn under $57,000 a year. And we also have a website that's www.mdcashacademy.org. That's where the listing for all the financial education classes, which are all virtual at this time, are listed for you to be able to find one place to go locate a fact-based financial education class, such as the one you're attending today. So in the month of April, Financial Education Month, we have over 56 different webinars. So please feel free to take a look and see what you'd be interested in. We also have some content specific to the pandemic and how to reduce the financial impact of this time period. We also have some webinars that are recorded so you can look at them when you'd like to. So diving right into our topic of credit today. So why is credit important? Well, a lot of people find it difficult to be able to save up enough money to buy a home or to buy a car. So credit is important in terms of being able to borrow money for these purchases. It's also really important in terms of the interest that you will pay. And we're going to go over an example of that in just a minute. Some people use credit to fund their education with student loans, and some people use credit in terms of having emergency. Obviously, you want to be able to save and have emergency savings in place, but if you don't, some people are able to use credit cards or loans to be able to deal with that emergency. So what are credit reporting bureaus? I don't know why this keeps moving. So credit reporting bureaus are companies who exist to collect data on how all of us are handling credit and provide that information to the lenders, so lenders can make a decision whether or not to loan to us. So it's sort of important to know that the main customer of the credit reporting bureaus are really the lenders, not us as far as consumers. We actually don't give them permission to collect this data, nor do they pay us to collect this data. But because they are collecting data on us, and it does impact many aspects of our life, they're actually regulated by the federal government and have to comply with the regulations and laws that are in place. So really their job is to gather and organize the information about how you handle credit. It's also important to know that there are many different credit reporting bureaus. We know about the three big ones. We're going to talk about those in a minute, but there are many other ones too. And because lenders get to choose whether or not to report to credit reporting bureaus, they actually may not have identical information. One lender may choose to report to one of the credit reporting bureaus and not all three. So as you're thinking about getting your credit report, it's important to remember that there may be different information from each of the credit reporting bureaus, so you do need to get your report from different ones. So what's on your credit report? There's personal identifying information such as your name, your address, your employers. And when you pull your credit report, it's actually very important to check this information. A lot of people kind of skip over this because it may not seem important at the time. But many people have had either mistakes or potential identity theft happen, and they have different addresses or they've never lived or a birthday that's not theirs. So please take a look at that information when you pull your credit report to make sure everything on there is correct. It has your credit history. Those are the accounts that you've opened seeking credit and how you have paid them back. Public records information on a credit report at currently, the only thing that will show up in public records is if there is a bankruptcy. So any lawsuits or judgments that may be against you are no longer going to appear in this section on the credit report, only bankruptcies. And then the last piece is inquiries. And inquiries are where we've either applied for credit, which makes it a hard inquiry, or a soft inquiry, such as if a landlord pulls someone's credit. The soft inquiries do not impact your credit score, but the hard inquiries do. So, how do you get your credit report? Well, there's one website that the federal government and the credit reporting bureaus collaborated on, and this is the place to go get your credit report, annualcreditreport.com. Federal law allows you to get a free report every year from each of these major credit reporting bureaus. So you may choose to get one in January. Maybe you're going to pull Equifax that month. Then in May, maybe you pull TransUnion. Maybe in September, you pull Experian. If you spread it out throughout the year like this, you're actually sort of getting a free credit monitoring system where you're checking on your credit throughout the entire year. But whatever system it is that you come up with and that you will regularly use to check your credit report, whether it's pulling all three of them on one time or again spreading them out throughout the year, it's just important that you make sure you have a system in place to remind yourself it's time to pull my credit report now. If you've been denied credit or denied favorable terms, you're entitled to a copy of your credit report for them too. Also, Maryland is an awesome state. We've actually had the right to have our credit report for free, one per year from each of the credit reporting bureaus for many, many years, way before the federal law came into play. So, what you can do if you like is to get 3 copies of a credit report, again, one from each of the major credit reporting bureaus per year under federal law. You can also get one under Maryland law. That entitles you to 6 credit reports in a year. And due to the pandemic, the credit reporting bureaus are offering free reports weekly until next April. So, what is a credit score? Credit scores came about again because of lenders. Remember, they are the main customer of the credit reporting agencies. So basically, lenders went to these agencies and said they were tired of their staff having to take the time to read 20, 30 pages of a person's credit report in order to make that lending decision. So the credit reporting agencies came up with a formula, an algorithm, or a very long math formula to take the pieces of information that's in the credit report and turn it into a number. Generally, these numbers range between 350 and 850. So it's based on the analysis of the credit report in order to assess our credit worthiness, again, for the lenders. So it's important to always make sure that everything on your report is accurate because it's being used to calculate your score. So the score is going to be different depending on the algorithm or the math formula that's being used. So if a car dealer pulls a credit report or a credit score for a consumer to decide whether or not to make a loan to them, they're going to get a different number than if a mortgage lender pulls that information. So they're industry specific. And if you pull your own credit score, it may be different as well. So please don't feel like there's just one number that is just identifying you and that's it. There are many, many credit scores, and they can go up and down depending on the information that's, again, on the credit report. So I just want to give you an example of why a credit score matters in terms of the amount of money that you're going to pay for a loan. This is an example of a small dollar loan for $2,000 that's going to be spread out over 36 months. So it's an installment loan. And if you look at the very top tier of credit scores, the 760 to 850, the interest rate that a lender would give that person on this $2,000 loan is 10%. However, if you look down at the very bottom, the lowest credit score range, the 300 to 579, theoretically, you will not be able to get the loan for this laptop if you have that credit score because the credit worthiness or the credit risk factor for that lender, they would probably make the decision to not loan to a person with that score. However, you look at the next tier, the 580 to 619, a lender saying, yes, I will loan to this consumer with a score in this area, but they're going to have to pay a lot more interest because I'm concerned about the risk of them repaying this loan. So that interest rate is going to be 38%. So if you do the math down at the bottom, the interest that that consumer would pay that has the highest credit score tier is $323. But the interest for the lowest tier, the one that's going to be 38% interest, is over $1,400 in interest. So the difference of that is a little over $1,000 in interest, money coming out of your pocket for having the lower credit score. So, as much as possible, it's really important to maintain and grow and build a very healthy credit score so that number one, you can get the loan, but number two, you will pay less money in interest. So, where do you get your credit score? Well, the federal government has not negotiated or mandated that the credit score be free for consumers. Your credit report is free. Your credit score is not free under federal law. So, is it on the credit report when you pull your credit report? No, it's typically not included with your credit report. The credit reporting bureaus do have a score. They each have their own again. Remember, there's multiple scores, but they charge for it. So if you're on the annualcreditreport.com's website and you agree to get a score, you're likely going to have to pay between $8 and $15 depending on the credit reporting agency. So there's a site you may have heard about that's Credit Karma or other sort of websites you can go to offer you a free credit score. If you choose to go on the websites and look to try and get a free credit score, just want to make sure that you're aware of why this company can offer you a free credit score. So always track and make sure you know how the company is getting paid. How are they making their money? Specifically, some companies are making it by targeting ads to you. They're hoping that you will click on them. They get paid for the click throughs. If you actually take the loan product, they're going to get a commission-ish from that company. So making sure you know how they're getting paid. And importantly as well, make sure you know what they're doing with your data. Always checking the privacy policy and the terms of use for how that company is using your data. There are probably other ways that you can get a credit score for free and not have to put in your personal information on a website such as Credit Karma. And that can be with your bank. Your banks now are generally offering a credit score. If you have a credit card company, they're probably offering it to you as well. So different companies have said, our customers want to see their credit score for free. That's a service that we will offer them in terms of the business relationship they have with them. So look for places where you can get your credit score for free, but you don't have to give away your personal data in a website and hope that they are secure enough and able to protect your data. So what are some ways that you can build or rebuild credit? A secured credit card is a very effective way in order to either grow a credit score if you don't have any credit at all, or if there's been some difficulties with credit. A secured credit card is where you save up a certain amount of money that's a minimum, generally speaking $250 to $300. You go to an established bank or credit union, you give them that money, they put it in an account, they don't touch that money, you don't touch that money. They give you a secured credit card with a credit limit of $250 or $300, whichever it is, no options to exceed that limit. So the reason it's secured is because if for some reason a person charges up to the limit, and then doesn't pay that card, the bank or credit union has that account money that they can use if for some reason the card isn't being paid off by the consumer. So everything that's done with a secured credit card in terms of being reported to the credit reporting agencies is the same as an unsecured credit card. An unsecured credit card is one where you have not given up that money as a security. You're getting the prepaid credit card offers maybe in the mail, or you go and choose a credit card by deciding which factors and features that you want in one, but you're not putting any money up front. Both of those type of loan products, the secured and the unsecured, are being reported to the credit reporting agencies. The secured credit card is, after about a year, turned into an unsecured credit card, and the consumer gets back that deposit that they've given to that financial institution. And generally speaking, the credit limit will increase beyond that 250 to 300 if everything has been conducted well with that credit card during that year. So those are two ways to build or rebuild credit. There is a thing to note though, with the secured credit card, there is generally an annual fee or an initiational fee of $45-ish, depending on the financial institution. So know that you probably will pay a fee for that secured credit card. An installment loan is one other way to build or rebuild credit, and that's similar to the loan we talked about with the laptop, where it's over a certain period of time, it's broken into equal installment payments per month. Again, all the information and all the data on how this account has been handled is being reported to the credit reporting agencies. So I just want to summarize with some quick tips on how to build a strong credit score. It's really important to keep the accounts active. You want to establish and maintain a mix of at least 3 active installment or revolving credit trade lines. And the biggest part of your credit score is pay on time, pay on time, pay on time. One missed payment can drop a score sometimes by 100 points. So it's important to have credit products and use them. If you don't use them, they do appear on your credit report, but they're not factoring information into your credit score because no data is being transferred from the lender to the credit reporting agency because no activity is happening on that account. So, for example, if you get a credit card, think about possibly putting a 1 tank of gas on it a month. Pay it right off so you don't pay any interest on it, but that gets data flowing to the credit reporting agencies to help show how you're handling credit and to build your score. So the other tip is to keep it low, making sure that you don't use all the available credit that you have to you in the revolving lines of credit. That's typically going to mean a credit card. If you have a credit card that has $1,000 of available credit to you, the general rule of thumb is to not use any more than 30%, but the less you use, the better. We've been seeing that the healthiest credit scores actually have a utilization rate of 10% or lower. So ideally, you don't want to carry a balance on a credit card because you're going to pay interest on it. But if you do sometimes, because life happens, just try and keep it as low as possible. And the last tip is to keep it up. You want at least 6 months of your credit history with activity now on your credit report at any time. So that was information on credit reports and credit scores. And I'm going to turn it back to Kiana for our next presenter, and I'll certainly be available for questions.
Thank you, Sue. Great information. And again, if you have any questions, please put them in the chat box and we will address them towards the end. Next up, we have Meredith Merchant, Office of the Commissioner of Financial Regulation.
Thank you. Good afternoon, everybody. Thank you for joining, and thank you, Sue, for that great presentation on credit scores. So I am the Director of Outreach and Education for the Office of the Commissioner of Financial Regulation. I'm going to be talking a little bit about your rights when dealing with check cashing services, consumer lenders, and student loan servicers, and I will explain all of that as the presentation goes on. Let's see. Not able to, there we go. Okay, quick disclaimer. Please do not interpret anything that I'm about to say as legal or financial advice. If you find that you need specific advice for your situation, I encourage you to reach out to a a group like the Cash Campaign that Sue's with, or many of the other consumer advocates and nonprofit groups in Maryland. Okay, and I'll also be going over very briefly some of the COVID-19 financial relief that's available right now. So first, a little bit about our office, because most people haven't heard about the Commissioner of Financial Regulation. We regulate the financial services industry in Maryland. So that means that we make sure that certain financial service businesses or individuals that are operating in Maryland are doing it, are in compliance with various state and federal laws, including consumer protection laws. And to enforce that, we will conduct examinations and investigations of these businesses, which includes investigating consumer complaints. The types of businesses that we regulate are listed here. So it includes Maryland chartered banks and credit unions. So we issue special charters for typically the smaller banks and credit unions. Sometimes you can think of them as community banks that are in Maryland. Now, national banks and credit unions, think like any bank that has NA after its name, like Bank of America NA or Wells Fargo NA. That stands for National Association. Those banks are primarily regulated on the federal level. However, they still have to abide by Maryland law. And same thing with credit unions. We license and register businesses like mortgage companies and mortgage brokers. So we refer to everything else that's in this list as non-bank or non-depository. So yes, that includes the mortgage companies and loan originators. That also includes check cashers, money transmitters, like when you go to ACE, check cashing, and they also wire money, debt collection agencies, various other, Sue mentioned installment lenders and credit reporting agencies. We also have regulatory authority over them, and debt management and credit services. What that's referring to are those companies that say that they can help consolidate your debt, or that they will do credit repair. Most of them have to be licensed in Maryland. And then also sales financing companies, and there's many other types of businesses too many to list here. We also have additional authority. We have a student loan ombudsman in our office, and we regulate a special group of like credit service businesses called foreclosure relief consultants, and you have to be very careful with them. A lot of them will promise to help you with a foreclosure, but they're charging you money for that. But they're not really doing much more than what you could get from going to a nonprofit. If you want to learn more about our office, I'd encourage you to go to our website. It's labor.maryland.gov/finance. Make sure you're going onto the finance tab to learn more about our office. We'll be rolling out a series of website upgrades in the next few weeks, so I'd encourage you to check that out. So first, let's talk about check cashing. Okay, what do I mean when I say check cashing? So basically, it's just a business that accepts or cashes for their compensation payment interest for consumers. So payment instruments that typically we think of checks, but there are other sorts of payment instruments as well. Businesses are required to have a license if they're cashing checks and charging a certain fee. If the check cashing is incidental to the retail sale of goods, so again, what does that mean? If they're doing it, if their primary purpose is to sell something else, like grocery stores, then they may just need to get a registration. The difference between a license and a registration really isn't important for the general public to know, but how it matters is it matters how much they are charging, right? So for licensed check cashers, the ones that advertise actually as check cashers, these are the limits for what they can charge you. The percentage is the amount of the check. So, you know, if it's a government issued like a Social Security check, the most that they can charge you to cash it is 2% or 2% of what the check is, or $3. I don't expect people to remember this fee structure, right? So here's the bottom line. A check cashing business should not be charging you more than $5 to cash a check. And they should not be charging you more than $5 for a membership fee. Just a few businesses that I'm aware of do that. So for registered check cashers, they also have that $5 cap and a 1% or 1.5% interest rate. Again, it's tough for consumers to keep track of all of this, right? To make sure that they're not being overcharged. So there's additional requirements for check cashing businesses. Number one, they have to provide a receipt. So when you are cashing a check, you should receive a written receipt that has the date of the transaction, how much the check was, the fee that the business charged, and in the end, the amount that was paid to you, right? So they take their fee out of the check. And with this information, you should be able to tell whether or not you were overcharged. If you suspect that you were overcharged, we ask that you please report it to our office. That's what helps us keep track of what's happening in the state and whether or not businesses are complying with Maryland law. Another requirement is that the business must post a notice with their fee schedule and the contact information for our office, right? So the idea is that all the tools should be there in that business, given to the consumer should they need to follow up with our office or if they have concerns about the amount that they were charged to cash a check. So we're going to move on to consumer loans. And again, if there's questions about any of these, I'm happy to take them after the presentation. So first of all, what is a consumer loan or a consumer lender? It's a very general term. It's basically a business that makes a loan or advances any money or credit under Maryland law. So this includes personal or unsecured loans. Most consumer lenders need to be licensed by our office. So some examples include like the auto loans is a good example of a consumer lender. You can find consumer lenders these days online. Even though the business is online, they still need to follow Maryland law. And sometimes they will say, you know, not very often do they advertise consumer loans. They'll say it's a personal loan or an unsecured loan. Another type of consumer loan is a payday loan. So a payday loan describes a typically short-term, a month-to-month sometimes, higher interest loan. Sometimes it's referred to as a cash advance or payday advance. And it doesn't have to be on the payment schedule, you know, of a borrower's payday, but this is commonly what these loans have come to be known as, particularly because the interest rates can be so high that people may get trapped and they're not able to make the payments until they get their paycheck. And then it becomes this cycle of taking out a loan that they're not able to pay until they get their paycheck. And then they have to take out another loan because so much of their paycheck is going to paying off the previous loan. And that's why payday loans can be difficult to manage. In Maryland, however, we have some pretty strict interest rate caps. I've heard of payday loans that are upwards of 100% interest. And, you know, the interest is the amount extra that you're paying on the loan, right? So it's basically what you're paying the lender for the ability of getting a loan. An easy way to think about it is their fee. So the interest rate caps, the limits for interest rates in Maryland depend on the amount of the loan. If it's under $2,000, then the first 1,000, the maximum amount that they can charge is 2.7% per month or 33% annually. And then you'll see that for the next 1,000, it's 2%. And then for anything over that, it's also 2% with a 24% yearly. Again, I understand that this can be hard to keep track of, but the bottom line is that you should not be paying more than 33% for the first $1,000 of a loan and no more than 24% total. That's still a pretty high interest rate, but it's much lower than what's allowed in other states for these sorts of personal payday or consumer loans. So there's some additional restrictions. These interest rate caps apply to loans $25,000 or less. There are some exceptions, some limited exceptions. There's not time to go into the details now, but generally something to keep in mind, again, is that if you are in need of a loan that's under $25,000, you should not be paying more than 24% annual percentage rate or 2% per month. If you're not sure whether you got overcharged for a loan, please contact our office. The contact information will be at the end of this presentation. Again, just like with the check cashers, it's really helpful for us to know what consumers are experiencing in the state, and it helps us enforce the various consumer protection laws. Another thing to keep in mind is that cashing a post-dated check can be interpreted as a loan under Maryland law. So the business that is cashing a post-dated check also needs to abide by these interest rate caps as well. And then finally, I'm going to talk about student loan servicing. Okay, so what even is a student loan servicer? You've heard of student lenders. What is a student loan servicer? Well, a loan servicer for any sort of loan is basically just the company that collects and processes your payment on behalf of the lender. So there's loan servicers for auto loans, there's loan servicers for mortgage loans, and there's loan servicers for student loans. It's the company that you make your monthly payments to. So for student loans, for a lot of people who got federal loans through the U.S. Department of Education, you don't make your payment actually to the U.S. Department of Education. You make your payment to a third party, and they're the ones that do the processing and do any of the negotiation if you're falling behind on your payments. They're basically the ones that you deal with directly. Consumers do not get to choose who their loan servicer is. The lender chooses the loan servicer. In Maryland, we have a student loan ombudsman, and the student loan ombudsman is in our office. And the ombudsman is a liaison between borrowers and loan servicers. So that means if you're having trouble with your loan servicer, you can submit a consumer complaint to our office and he will investigate it. Types of complaints that you can submit to us. For example, if you feel like your loan servicer is violating your rights in any way, or even if you're not able to get in contact with them, or if they're not responding to you quickly, you can certainly contact our office about that. The email address is studentloan.ombudsman@maryland.gov. And again, all of this is on our website. Some things to keep in mind. So the loan servicer is not allowed to mislead you or deceive you in any way about your loan. They have to provide accurate information to you about that loan and transparent. So what do I mean by transparent? Well, they have to come right out and tell you what sort of fees you're paying, what your interest rate is, what the payment schedule is. Basically anything that you need to know about your loan, they're required to tell you. They are required to make sure that your payments are accurately applied and to correct errors when the payments are not correctly applied. So if they are putting too much of your monthly payment towards interest and not enough towards the balance of the loan, that's inaccurate. If it's not following the schedule that was presented to you, then again, you should contact our office and we'll reach out to the servicer and make sure that they correct that information. They're also required to report information about your student loan payments accurately to the credit reporting agency. So in a previous presentation, you learned about credit reporting agencies and how important they are. So in Maryland, we have a law that requires them to report information accurately, and if they do not, they are required to correct that information within a certain period of time. So that's another reason why it's important to monitor your credit report, because then you can catch if a loan servicer, whether it's a student loan servicer or another loan servicer like for mortgages or auto loans, is reporting your information accurately. There's much more in the Student Loan Bill of Rights. These are the key things to remember. Accurate and transparent information must be given to you. The payments must be accurately applied, and the information must be accurately reported to the credit agencies. So to learn more about the other rights in the Student Loan Borrower's Bill of Rights, please go to our website. And finally, I wanted to take a moment to talk about some of the COVID-19 financial relief that's available for folks right now, at least with respect to student loans and mortgages. So with student loans, if you have a federal loan, so if you got your loan through the U.S. Department of Education, your payment was automatically paused, and payment and collection on those student loans was suspended. Again, this is just for the federal loans until September 30th. For mortgages, now I know I didn't talk about mortgages in this presentation, but I want to make sure that this information gets out to people. If you have a federally backed mortgage, again, if the U.S. government was your lender or is involved in your loan in any way, you are allowed to request a pause in your payments. That's what forbearance means. It basically means a pause in your payments until June 30th. And in Maryland, new foreclosure actions are prohibited until May 4th. So that means nobody should be getting a notice of intent about foreclosure until or after May 4th. And we have much more information on our website about the various COVID-19 financial relief programs. We have a financial relief guide for consumers that's easy to navigate. And again, if there's questions about the activities of a lender, we ask that you contact our office. So if you have a complaint or even a question about any of the financial service providers that we regulate or any of the activities, please call our office, or you can send an email directly to our complaints unit and they'll get back to you right away. So here's the contact information for our office. Our phone number is 410-230-6100. And again, our website is labor.maryland.gov/finance. Thank you.
Thank you, Meredith. Great information. So now every time I hear that advertisement about payday loans, I'm going to think high interest rates and check cashing places no more than $5. So thank you.
Correct.
Our last speaker will be Patricia Dorn with the Maryland Insurance Administration.
Thank you, Kiana. Again, my name is Patricia Dorn. I'm with the Consumer Education and Advocacy Unit of the Maryland Insurance Administration. My email is on the bottom here. If you have any questions afterwards, it's patricia.dorn@maryland.gov. And this is auto insurance in Maryland. So auto insurance laws are different from state to state. So I'm going to talk about the auto insurance in Maryland. We're going to talk about what is the Maryland Insurance Administration, so who our agency is, and then what is auto insurance, comparison shopping, what to do if you're in an automobile accident, filing an auto insurance protest or complaint. And so what is the Maryland Insurance Administration? We are the state agency that regulates insurance in Maryland. That means that we license the insurers and the insurance producers. So your insurance producers, those are your agents and your brokers. We examine the business practices of those licensees to make sure that they are in compliance. So we make sure they follow the laws. We monitor the solvency of the insurers. So we make sure that they have money to pay your claims. We review and approve insurance policy forms, and we review the insurance rates. So we make sure that the rates that are charged to you for auto insurance are not inadequate. So we don't want them to be inadequate because we want them to have the money to pay your claims, but also to make sure that they are not excessive or unfairly discriminatory. And we also investigate consumer, that's you. So we investigate your complaints and allegations of insurance fraud. So you can contact us with your complaints about your insurer, your insurance producer, your agent, or your broker, or contact us if you have an allegation of insurance fraud. At the bottom here is a little link to videos. On the State of Maryland YouTube page, we have all kinds of videos that the Maryland Insurance Administration has produced. There's a couple links throughout here where you're just going to see the name. So how the MIA can help is kind of our introduction to who we are and what we do. And so if you feel that your auto insurer or insurance producer has acted improperly, you have the right to file a complaint with us. Some examples of improper action include improperly denying or delaying payment of all or portions of a claim, improperly terminating or canceling your insurance policy, raising your insurance premiums without proper notice, or making false statements to you in connection with the sale of insurance or processing of insurance claims, and as well as overcharging you for services. So what is auto insurance? So auto insurance is a contract. It's a contract between you and the insurer that protects you against financial loss. In exchange for you paying a premium, the insurer agrees to pay for certain covered losses as described in your policy. So first, I'm going to talk about liability insurance. Liability insurance being what you absolutely positively need in Maryland to drive your vehicle. Liability insurance protects the policyholder and other insureds when they cause an accident. So that's you, the policyholder. And there's two types of liability coverage. Bodily injury liability coverage. That protects you if the driver of your car causes an accident and an injured person makes a claim or files a lawsuit against you, unless the driver of your car is excluded or does not have a reasonable belief they are entitled to drive your vehicle. So drivers can be excluded, listed on your policy as not being allowed to drive your vehicle under the terms of that policy, or does not have a reasonable belief they are entitled to drive your vehicle. Well, that could be a situation where your vehicle was stolen. Property damage liability. So property damage liability. This protects you if the driver of your car causes an accident resulting in damage to someone else's property. So like another vehicle, or it could be a fence. Again, unless the driver of your car is excluded or does not have a reasonable belief, they are entitled to drive your vehicle. And here are the minimums. So Maryland law requires all registered vehicle owners to carry a minimum amount of liability coverage. And this is the coverage required by law. $30,000 for bodily injury per person, $60,000 bodily injury per accident, and $15,000 property damage. That is the absolute minimum. And those, I mean, $15,000 of property damage is less than the average cost of a brand new car. So this is the minimum. And then uninsured motorist coverage. This is going to protect you and other insureds under your policy's terms when an accident is caused by a driver who does not have auto insurance coverage or does not have enough liability insurance, or when the owner of the at-fault vehicle cannot be identified, such as in the case of a hit and run. So these minimums are the same. Maryland law requires all registered vehicle owners to carry a minimum amount of uninsured motorist coverage with those same limits: $30,000, $60,000, and $15,000. So what happens if I have a lapse in my auto insurance coverage? So I have an amount of time where I don't have auto insurance. Maryland law requires that you maintain the required minimum coverages, so those coverages that we just looked at all times while the vehicle is registered. The Motor Vehicle Administration will assess a penalty for every day that you do not maintain minimum coverage. And you're going to find details on the Motor Vehicle Administration's website. Collision coverage. Collision coverage is an optional coverage that you purchase to provide for payment of property damage to your insured vehicle from a collision with another vehicle or object. If you're in an accident and have collision coverage, your insurer will pay to repair your vehicle, or will pay you what your vehicle was worth right before the accident occurred if your vehicle is a total loss. So the liability, that's not going to cover your vehicle. This collision coverage, that is what's going to cover the vehicle that you own and that you drive. Comprehensive coverage, that's going to pay for damage to your car resulting from causes other than a collision. For example, vandalism, theft, or storm damage. And typically both collision and comprehensive coverage do have a deductible. So a little bit more about comprehensive coverage. When it comes to auto insurance coverage, this provides you for property damage to your insured vehicle resulting from occurrences other than collision. So the collision coverage part is for the collision, comprehensive other than collision. Things like, well, like the pictures show, and flooding, theft, vandalism, glass breakage that didn't result from an accident, or a vehicle striking an animal. A little bit about PIP, Personal Injury Protection, PIP. This provides reimbursement for medical expenses arising from a motor vehicle accident for injuries to you, your passengers, or possibly a pedestrian struck by your vehicle. It'll cover lost wages. It'll cover other related expenses arising from that accident. Maryland law requires insurers to offer you at least $2,500, $2,500 in PIP. So they have to offer it, and you may elect to purchase limited PIP coverage. And certain individuals may be able to fully reject PIP coverage. And so you can talk to your insurance producer about more information about your situation with regards to PIP. All right, so obviously auto insurance can be a big expense for some people, and comparison shopping is important. There are a lot of companies in Maryland offering auto insurance coverage. And so it's worth it to you to know that, first of all, because if you just pay attention to the big guys that are advertising on TV, you might be limited. There's a lot more companies than that offering coverage. And I'm going to show you a document in a couple more slides where you can get more information about all those different companies. But comparison shopping is important. It can be time consuming, but it is worth it. So comparison shop by looking to see if you can obtain the same coverages from another insurer at a lower cost. And so same coverages is important because you want to make sure that you're doing an apples to apples comparison. Make sure that you're comparison shopping, that you keep the things the same from company to company. So if you're talking about a $500 deductible with company one, go ahead and keep that deductible the same for company two. Otherwise, you're not really doing a real comparison or a real apples to apples comparison. So make sure you compare policies that offer the same types of coverage with the same deductibles and the same coverage limits. Make sure that the information you provide is accurate and that you provide the same information to each insurer that you call. And ask about those deductibles and ask about when they apply. Ask about what is covered and ask them about what is excluded. Don't buy the insurance policy based solely on its price. You might want to consider coverages, limits, maybe customer service, including claim service. And don't hesitate to ask your friends and your neighbors about their experiences with different insurers. So at the Maryland Insurance Administration, we publish this auto insurance, a comparison guide to rates, rate guide. And so what you're seeing here is the cover. This is actually August 2020's cover. This is published every 6 months. So it's actually a newer version out right now. But again, you can see this online. You can request a copy be snail mailed to you. But this is the cover, and I'm just going to show you a couple pages of what it looks like in the inside. And I am going to say one other thing. This is a little bit of a condensed version of my auto insurance presentation. If you go to our YouTube page, the entire presentation has been recorded, and it dives into this rate guide a little bit more. And the rate guide is fairly easy to understand, but I do know that some people can get a little overwhelmed by it. There's a lot of data, there's a lot of numbers in there. And for some people, you might have questions. You can look at the full version of this presentation, but you can always just send me an email at patricia.dorn@maryland.gov. If you have questions, if you have this in front of you and you're confused about how to use it, you can always call. I'm happy to call you and step you right through it. And so what you're going to see in there are rates. I know the font in here is a little bit small. I'm just going to show you real quick. I zoom in here. but I'm going to keep this one up for a second. So this is what you're going to see. You're going to see these different pages of rates based on different driving situations. And on this page, we have the insurers A through M and different counties. And if you look at that first county, if you can see it, it's Allegheny County. And then those are rates for a year. So rates for 1 year for that driving situation for the different insurers. And that's what you're going to see in this guide. On the left, there's some asterisks. I think they're probably easier to see here. So you see the asterisks on the left here, and that's going to tell you the companies that use your credit score in determining your premium. And that's important. In Maryland, a company can use your credit score in determining your premium. And that can actually be up to 40% of your premium. So it's important. It's important for you to have access to the information that tells you which insurers do that and which don't. And so that's why we give you that information. The asterisk indicates those insurers that use credit scores in determining premiums. If you're more comfortable sticking with the ones that don't, that information is there for you. And so this guide lists those insurers. Oh, in this guide is the insurers writing the greatest number of policies in Maryland. And just to know that you may not qualify for coverage with all insurers. So that's just an FYI. And there's about 55 of them listed in the guide. So that's our rate guide. It's a great little guide. It's available on our website, so you can download the PDF and look at it on your computer, or you can call us at 1-800-492-6116, and you can request a snail mail copy. We update the guide every February and every August. And the insurer's phone numbers and the websites are available in the back of the book. So you use the book and you can kind of narrow it down to the companies or the insurers that you want to contact. And then that information with their phone numbers and their website will just be in the same document toward the back. Here's a couple more things. If you're in an automobile accident, what do you do? Well, you're stressed. So that's for sure. But it's still good to hear these things and understand. And so hopefully you can remember them in that situation. Dial 911 if needed and give the operator information about the incident and if any medical assistance or towing is needed. If it is safe to do so, take pictures or draw a diagram of the scene. Remove the vehicle from the roadway and off to the side if possible. Talk to witnesses if anyone pulled over. Obtain their names, their addresses, and their phone numbers. Cooperate with the police and provide all information requested. Write down the incident accident number, the officer's name, and the officer's badge number. Write down the location and the time of the accident and exchange information with all involved in the accident, as well as the insurance information. Contact your insurer as soon as possible and provide all information as requested. So filing an auto insurance protest or complaint. If you receive in the mail, if you receive a notice of premium increase or a non-renewal notice, so you've been told that the policy that you have, you're getting a premium increase or that it is not renewing, you have the right to file a protest and have your situation investigated. Again, the thing underneath here is a little link to another one of our YouTube videos, which is protesting an auto rate increase. We also have a rapid response program that is designed to help certain consumers resolve the property and casualty claims. So an auto claim is an example of a property and casualty claim. And so to resolve these quickly and without having to file a formal written complaint. And that phone number is here. If you wanted to contact that, that's us at 410-468-2340 or 800-492-6116 extension 2340. So if you have a complaint against your insurer, you can contact the Rapid Response Program. And again, if you receive the notice of premium increase and you say, I'm protesting this, you have the right to do that and have your situation investigated. Also, participation in the Rapid Response Program is voluntary and it does not affect your right to file a formal complaint. You can also file a complaint by going online, and that's just our website. Our website is www.insurance.maryland.gov. And you're going to go under consumers and click on file a complaint. And now actually you can click on file a complaint directly from the insurance.maryland.gov. Some publications that are available: we have a consumer guide to auto insurance. We have tips on shopping for automobile insurance, and all of these things are on our website. Understanding your automobile insurance declaration page. So that first page that comes with your automobile insurance policy. This kind of helps you understand, and they're becoming more and more readable, certainly, but this will step you through how to understand all those numbers. Auto insurance, the comparison guide to rate, which we discussed. And we also have an insurance preparedness guide for natural disasters, which does go into more information about auto insurance. And this is our contact information, as well as the contact information for the Motor Vehicle Administration. My email is here, again, patricia.dorn@maryland.gov. And thanks, and back to you, Kiana.
Thank you, Patricia. That's good to know, because I'm up for renewal. So I think this is the perfect time for me to probably look at that shopping guide. We just have a few questions. This also was a good way to kind of see where your insurance as well as loans and how all of that is connected to your credit. So this was a great webinar to put together. I just have some questions. The first one is for Sue. Are the cash transfer companies like PayPal, Zelle, and Cash App regulated? Or maybe that's from Meredith.
Yeah, let me see. Okay. Cash transfer companies. Yes, they are regulated. So I didn't talk about this, but those are regulated under Maryland's money transmission law. So they are considered money transmitters because that's what they do. So PayPal is regulated by the state. There's also some conversations about what authority the federal government has over PayPal. The Consumer Financial Protection Bureau and PayPal have been in lawsuits about that. So I guess to answer the question, our office does. If you have a complaint, submit it to our office. You can also submit complaints still to the Consumer Financial Protection Bureau or the Federal Trade Commission. Cash App is actually owned by the Square Company. Again, that's regulated by us. It's a money transmitter. Zelle's a little bit of a different animal because it's actually owned by the banks that use it. It's like an extra service provided by the banks to facilitate their own wire transfers. Even if you download the app separately, you can only use it with certain banks. So if you have an issue with Zelle, you actually have an issue with the bank. So you would submit a complaint to whoever that bank regulator is. There's a really nifty website actually called NMLS Consumer Access. When I'm done talking, I'll type the URL into the chat. where you can look up any business. So, if you type in PayPal and search, you can pull up PayPal's profile, and it will tell you what sort of license PayPal has in every state and how to contact the regulator for that state. If you put in Cash App, it will pull up Square because that's its parent company. So I'll make sure to put that website, where you can search providers to see who regulates them, into the chat. And also you can get to that search function through our website as well.
So Meredith, due to what's going on with COVID and the mail system moving really slow, so people are getting bills late and maybe causing them to pay their bills late. Is there anything they can do about that, or is there any way that can be resolved through talking to the companies or anything?
Yeah, I don't have a firm answer on that. I think it would be really situational. So it would depend on what the circumstance is, right? So we always recommend that folks try to reach out to the company and file a complaint with them, or talk to their customer service first, or see if they can get some late fees waived, or anything like that. And then if there's still no resolution, if we're the primary regulator, you can reach out to us, but we don't have any, obviously, authority over the mail.
Thank you. So Sue.
Kiana, this
Yes.
is Joy.
Mhm.
And on the mail question, actually, we have a consumer advisory on our website. And if I get a second, I will put that in the chat, that tells consumers some steps that they can take to help them when they're dealing with mail issues, things like contacting their lender, contacting their insurance company. And also, so this particular consumer advisory, while we wrote it for the insurance industry, the steps that are in there would be applicable to all types of services. So let me pull that up and put it in the chat.
Thank you, Joy. Sue, does medical debt get listed on your credit report?
Sue, you're muted.
You're muted.
That's the 2020-21 thing, right? You're on mute. So anyway, medical debt is a big issue and a big problem. And fortunately, there have been some changes in terms of what's going to be on the credit report. So medical debt that is 180 days or less is no longer going to be on the credit report. And I believe that came about because it was understandable that there's a lot of disputes between, insurance companies and the medical provider. And so that gives some time for them to figure out that dispute. So again, medical debt that is 180 days or younger cannot be on the credit report, and credit report that has the medical debt that has been resolved, whether it's paid by the consumer or by an insurance company, is not to be on the credit report either. So at this point, medical debt may show up if, say, perhaps it's in a collections area and it is older than the 180 days. So that may show up on someone's report, but the other two instances I just mentioned will not be on the credit report.
Thank you. So another question about the mail. With having these issues with the mail over the last year causing payments to technically be late, will this affect my credit going forward? Sue?
I'll take a stab at that first. So I agree with Meredith that it's really important for people to contact their creditors and let them know if, I sent it in, you can know the problems with the mail system. Most creditors that I've heard of have actually been kind of understanding and have waived the late fees and have not been reporting things negatively on the credit report. But it is important for all of us to take charge of our bill paying and the resulting impact on the credit report for ourselves. So if we know that there is a bill coming up, we know we've paid it, I think it may be helpful to do a step further and call the creditor and say, I just mailed this, a week before it's due. I just want to let you know I have mailed it. It is coming. I've done my step. And maybe that way would help the creditor understand that it's just a matter of the mail system having difficulties right now.
Thank you, Sue. Meredith, what happens if someone sends a different amount than the agreed upon monthly payment for a student loan?
Okay. Thanks for that question. This actually would apply to all loans. So if you know that you're not going to be able to make the full monthly payment, it's really important that you contact the loan servicer before you send it. They have certain formulas, they have to put a certain amount of your payment towards the interest so that they get paid back for giving you the loan, and then a certain amount towards the principal. So if you know that you are going to be, that you can't afford to make a full payment, it's really important that you let the servicer know before you send it in to tell them how you want it allocated. And in the case of mortgages, I know the question was about student loans, but in the case of mortgages, sometimes they won't be able to take a partial payment, and then you have to work out something else. In the case of student loans, contact your servicer first, let them know, and tell them how you want it allocated. And conversely, if you want to pay more, this is just for student loans, but if you want to make more than the monthly payment, you also have the right to tell them how you want that payment allocated, right? So do you want the extra that you're putting forward to go towards interest, or do you want it to go towards the balance, the remaining balance on the loan? So the bottom line is that you need to reach out to the company that you send your payments to first, and make sure they're aware. And if you can tell them how you want it to be allocated, they should do that for you. For the student loans, the student loan servicers should allocate it as you request.
Thank you. So I have a question. So you know how you go shopping for a car and then trying with different people to try to get your loans. Does that affect your credit in any way with them calling or trying to get your car financed with all these different lenders?
So great question. You're referring to the inquiries part of the credit score. So an inquiry is where we are going out there and saying, we'd like to get this car loan. And as consumers, right, we should be doing the shopping around to get the best interest rate. So checking with a bank or a credit union, right? Checking with the car dealer, whatever lender they use. So only in specific instances, such as this car loan and mortgage, if we are shopping around to get a better interest rate to make sure we're protecting ourselves, right? All those inquiries, we need to make them happen within 2 weeks. All of those inquiries will appear as one hard inquiry on the credit report, and then therefore reflecting on the credit score. But make sure that it's done within those 2 weeks. You don't want to spread it out over 6 months. So make sure again that we're shopping for the best interest rate, but doing it within 2 weeks in order to have them combined as one inquiry.
So I have one more question for you. So which of the three credit bureau reports is more widely used by lenders? Also, I noticed two of the three only report on a quarterly basis as opposed to monthly. Is that correct?
Okay, so two different aspects to that question. Lenders actually are really primarily getting scores now. They're pretty much not getting reports because it takes them more time, right, to be able to read and assess that to decide whether or not to loan to the consumer. So they're pretty much only obtaining scores at this point. And really, most lenders are using the FICO score. And FICO is gathering data from the three different credit reporting bureaus and kind of combining it into, they now have 10 different FICO scores. So most lenders are using that score. Another score that's used frequently is Vantage. So those are two, and sometimes I think of them as like Coke and Pepsi, like whichever the lenders feel their scoring model that they prefer, that's the one they're going with. So those are the aspects of which of the credit reporting bureaus is more widely used. It's really more the scores, and it's really more FICO or Vantage. And let's see, two of the three only report on a quarterly basis. So data is being reported by lenders on a monthly basis. And I'm not quite sure. I haven't seen any of the credit reporting agencies only like update my data on my credit report or something on a quarterly basis. It is pretty much done on a monthly basis, but maybe that person has more information than I do about the credit reporting agencies.
So when telling creditors how to apply extra money, is it advantageous to have them apply the extra money to interest or principal?
So I'm going to take first stab at this, and then Sue, as the actual financial advisor, might have some helpful tips as far as how to get your payment allocated. So I just want to stress that if you're going to pay more, it is primarily the student loan servicers. It's the student loan servicers that you should contact and tell them how you want it allocated. That's in the Student Loan Bill of Rights. The student loan borrowers have the right to tell the servicer how they want their extra payment allocated. I cannot stress enough that other lenders may not do this, and other servicers may not do this. Mortgage companies in particular, if you're gonna pay more, some do, some don't. But again, you should just reach out to them first. And then as far as whether there's an advantage to putting it towards the principal or interest first, I think it really depends on your financial goals. Sue, do you have tips for that?
Sure. And in general, the first thing I would say, kind of piggybacking on what Meredith is saying, is to check the terms of the loan. And when you're going to get into a loan, try to make sure the terms allow and provide for additional payments, just to make sure that the lender doesn't prohibit those or anything. And then, generally speaking, you're going to want to put it towards the principal, because you want to bring down the amount of the original debt, because then interest is going to be calculated on that. So for some reason, I don't play the lottery, but let's just say you all of a sudden got a whole bunch of money and you wanted to put it down your mortgage, right? Well, your mortgage is going to go down. The interest rates are still, the interest rate is going to be the same. The interest payments will actually reflect that in terms of how much money you eventually pay entirety for that mortgage, if that makes sense.
Thank you. Patty, so I have a question about auto. Is there an advantage to having my home and auto together?
So there can be, and you can oftentimes get a discount. You could get possibly a discount on both your homeowners or renters insurance and your auto if you were to bundle them, and certainly you're quite likely to get a discount in a bundling situation. But that said, you might be better off separating and going with two separate companies, two separate insurers. So it's still important to just, so your auto insurer, they may say, hey, you've got homeowners insurance now with Y, why don't you come over to us? Great. Get that information from them, but shop around and make sure, do the math and make sure that that's going to put you in the best situation, as opposed to potentially, it might be the best situation to go with two separate companies. So that's going to be just based on your situation.
Thank you. So if anyone else has any other questions, we still have time. You can put them in the chat. If not, I would like to tell people about our next event, which is another part of our financial series that we'll be doing for the whole month of April on Wednesday. We have one April 14th, where we will be discussing things for first-time home buyers. We also have a segment for financial about retirement, as well as life insurance and will registry. So again, please check Eventbrite as well as our website, www.insurance.maryland. And if we don't have any other questions, I would like to thank Sue, Meredith, and Patricia for being great and awesome speakers today. I know myself, I have learned a lot of important and great information. So shopping is one thing I will be doing since my renewal is coming up. Meredith, I will not worry about those payday loans at all with those high interests. And Sue, I will constantly be checking on my credit report just to see what is actually occurring. So thank you, ladies. I appreciate it. And I'd like to thank everyone for joining us. And we look forward to hopefully you join us for our April 14th event. Thank you.
Thank you.